So what I'm going to do for you today is give you my top trade for the week. In this video, we're going to run through exactly what I've found behind this trade, and I'm going to show you exactly how you could probably profit from it in the weeks going forward. Stay tuned if you want to find out more. Okay, so in this video, what we're going to be doing is I will be showing you my top trade for the week. Now, this trade is going to be a long-term trade. It is a very, very big trade opportunity that I've been looking at. I've been sharing with all of my students. What we're going to be doing is I'm going to try and keep this video as short as possible so I can pack in as much information for you. But we are going to be running through the 13 points that I've found that I want to share with you about this trade, and also just throwing up a few graphs and maybe a few articles that you can research. But the main goal for this video is to give you some information that you can go out and research this information for yourself, and you can decide if you want to trade this. But just first, please make sure if you want to keep updated with weekly educational content about trading, investing, and wealth management, make sure to subscribe to the channel because we're uploading weekly educational content. Also, make sure to go into our video library and have a look at all of the other videos we have available that you can actually watch and learn from. I'm sure there'll be something interesting you'll find in our library. So basically, just to jump into it, this trade is on the US dollar. So it's a Forex pair that I'm having a look at, and it is basically the bias that I've had for the past couple weeks going back on posting my information up on Twitter and a whole lot of my social media platforms. Just one tip, if you want to follow my weekly Twitter updates, I'm posting out data, statistical information, trading ideas every single day. So please make sure if you want to follow my Twitter page, and then you can also keep updated on everything I'm having a look at. But going back to this, we are basically having a look at the US dollar. Now, just to give you a bit of a background, the US dollar is considered to be incredibly weak right now. The whole of 2017, we saw the US dollar sell off against all major currencies in a very, very big way. The US dollar has continued to weaken, and there's been many aspects involved in this. But recently, what we've been identifying is that there is an opportunity to buy up a lot of dollar and try and hold that currency as it begins to strengthen. What I effectively mean by this is that we have identified against two currencies that the US dollar could possibly be a massive trade opportunity. So the two currencies that I've had a look at is the euro and the pound. What I'm going to do is I'm going to run you through the 13 points about why I've selected to try and buy up as much dollar as possible, and why I want to actually buy them up against the euro and the pound. So this effectively means the euro US dollar instrument that you see on your trading platform, I'm going to be short selling that as much as I possibly can over the next couple weeks and maybe the next couple months. Same thing applies to the GBP USD instrument you see on your trading platform. I'm going to be short selling that as much as I also possibly can. This effectively means I'm going to be short selling the pound and the euro and trying to actually buy up as much US dollar as I can in doing so. So effectively, going into the first couple points that I'm going to be talking about, number one is fiscal policy and everything to do with the central banking system. Now, to some of you, all of this information might sound very confusing, but this is exactly what I teach my students in the MS Equities Training Academy. We teach them about fiscal policy, everything to do with central banking information and central banking policy and processes. Now, something very, very important happened in the last week. Jerome Powell was elected as the Fed chairman for the Federal Reserve. Now, the Federal Reserve is the central bank that governs everything to do with the US fiscal government policy and everything else revolving around that ecosystem of the financial system inside the United States of America. Jerome Powell basically had to testify in front of Congress, talking about a whole lot of information to do with what he is planning for the year going forward and what he's planning for the next couple of years as well. Obviously, based on previous sentiment laid down by Janet Yellen, the previous Fed chairman, we knew that we were expecting a possible 3 to 4 interest rate hikes going into 2018. But people knew that because Jerome Powell was going to be taking over this month, they were not necessarily sure whether this rhetoric was going to be carried from Janet over to Jerome. So what they basically did was a lot of big investment groups and hedge funds tried to wait until they saw what Jerome Powell's opinion of the financial markets is. Now, please make sure to go and watch the videos about Jerome Powell, and what he spoke about in those videos, very, very important. But number one is that he confirmed there's probably going to be 3 to 4 interest rate hikes on the US dollar that is going to be gradual and progressive. Now, something else that he did mention is that there could be a possibility for extensive gradual rate hikes going into 2019. So what that effectively means is, due to the fact that they're going to try and hike interest rates as much as possible, that is going to make buying up and taking credit from the US dollar a lot more expensive. This effectively means the US dollar is going to become what? More expensive to have. That means the strength of the US dollar is probably going to increase quite well. Other things relating to what he spoke about is also very important, but the interest rate hikes is obviously the first fundamental point that we've identified. Another one is also that the US dollar is severely undervalued. Now, the US dollar is considered the strongest and most used currency around the world. Now, based on statistics, it far exceeds the euro, the pound, the Swiss franc, and the Japanese yen, and all other currencies in terms of currency holders based around the world. The US dollar is like English. It's the international currency. It's the international language of business. Now, what has been happening is, obviously, because a lot of people have massive holdings in US dollar, this has undervalued their holdings. They've been trying to move their money into other currency classes, but yet they still prefer to hold the US dollar overall. Now that the US dollar is a lot cheaper and they'd be able to buy up a lot more US dollar, you obviously are going to be seeing a stimulus of more US dollar buys. So over the next couple of weeks and months, I'm expecting a lot of more buying action on the US dollar based on the fundamentals that we've identified. Another point is also going to be talking about the balance sheet normalization process in the US. Now, back in 2017, Janet Yellen basically was going to unwind, it was about $6 trillion on the US balance sheet. And this effectively, what it did was it allowed the Federal Reserve to liquidate massive portions of holdings in things like credit and bonds and a whole lot of other things. And what this effectively does is this helps create more security to the Federal Reserve balance sheet. In terms, that effectively means that there's more security behind what the Federal Reserve would like to do next. So this basically effectively means it is going to give them a bit more room to move. Given the fact that the US balance sheet has now been reduced all the way down to levels back in 2012, and they might continue to reduce it, effectively means that there is a lot of room to move for the Federal Reserve in terms of what they might want to plan next, in terms of their additional investments, and effectively talking about the fact that they are going to be holding a huge amount more currency, meaning more US dollar, than anything else. Now, the other one is also talking about the technical values. Now, what I'm going to do is throw up a chart here for you to have a look at and basically see what's happening on the monthly chart. Now, effectively, what you'll be able to identify is there are 3 orange boxes that I've put up on the chart. That effectively shows a stochastic oscillator. Now, a stochastic oscillator helps us identify the levels that are oversold and overbought at any point in time. Now, what you can effectively see is the market currently is extremely overbought on the euro to the US dollar. Now, that is also very important to identify because this is going to be something that we're going to be talking about in just a second. Now, just that I make sure to speed this up a little bit, we're going to be talking about the euro and why I've chosen it. I'm going to be giving you about 5 points over here about why I want to short the euro against the US dollar. Now, the euro throughout the whole of 2017 strengthened massively. It became a seriously strong currency, and in some terms, it created a level where it was oppressing other currencies due to its strength. Now, one major point has to do with the QE program in the Eurozone. Now, I'm not going to explain this too much. Please make sure to go and watch the previous ECB conferences where President Draghi talks about the quantitative easing programs and what they are going to be doing with those programs and also their worries behind it. But basically, a few other members of the ECB have expressed their worries behind extending the QE program into the rest of 2018. What this effectively means is that if they do land up shortening this QE program or stopping it at some point, that could obviously be a massive blow to the euro currency. Another point is also going to be talking about inflation. Now, on a global scale, inflation has almost somewhat become incredibly slow to push higher, and all countries have been experiencing this issue to do with inflation. The Eurozone specifically has been experiencing massive problems with their inflation targets. They are obviously wanting inflation to rise as much as they can so they can begin hiking interest rates and bringing down that QE program. But basically what they're wanting to do is see those inflation numbers, and they are not seeing it. Inflation is not speeding up at the level that they wanted it to be. And slow inflation is basically causing a slight bit of worry in euro currency holders. They're not necessarily sure if they should be holding euro currency right now. The possible political issues with Brexit is going to be affecting the euro. Now, these issues might not affect the euro as much, it's more going to affect the pound, but that is also another major political worry. So the political balances inside the Brexit talks right now is not that good, and that could also be another worry to the euro currency. One of the last fundamental aspects is that the dollar is going to be pivoting against the euro. Let's say, for example, over the next year, the dollar strengthens massively. Now, this not only will allow people to move their holdings and their money into more dollar, it's going to detract currency holders from the euro. So let's just say, for example, if the dollar becomes a lot more attractive investment than the euro, people are going to be pulling their money out of the euro and putting it into the dollar. This is going to create a gradual depression to the euro currency strength. Now, this could be seen over a longer term and not a shorter term, but this is also an aspect. Now, just going back to this chart that we popped up just now, that is the euro versus the dollar. Now, what we can see is that there has been an incredibly long bull run where the euro has strengthened and the dollar has weakened massively. Now, last month we had a massive sell-off on the euro to the dollar. So the dollar strengthened, the euro weakened, and I was able to capitalize on that. Now what we can also see is that the last candle is showing that there is a slight spike up. Now, this spike happened due to the tariffs that Trump imposed right in the last week of February, the steel and aluminium import tariffs. So basically that's just volatility that we're seeing. But going into the next couple candles on the monthly chart, I'm expecting a bearish trend. Now, would this work? Wouldn't this work? That's effectively what I'm having a look at, and there's a lot more data behind it that I can share with you. But moving on to why I'm having a look at the pound as well. So basically, the core aspect why I want to short the pound is because the pound is an incredibly sensitive zone right now, and it's due to the political issues that they're experiencing. Now, to anyone who's keeping up with Brexit and what's happening with the progress there, it is not entirely going very well. Now, the Brexit not only is supposed to come to a close this year, but currently there is not much progress made that people can actually say this Brexit is coming to a close. What that effectively means is they're currently going through shaky ground, and there are many aspects behind why I feel this could be a reason why people are going to consider the British markets to be very risk off and try and move their value somewhere else. Last year, another one that we saw was that the GDP growth was less than expected. The economic growth inside Britain and the United Kingdom was also less than expected, and the stock market itself didn't do incredibly well. So what this is seeing is that currency holders inside Britain are not necessarily seeing the best condition. Given the fact that other conditions are a lot more attractive, they are going to look somewhere else. Now, obviously, we're going to see emerging markets pop up. People are going to look there. People are looking to South Africa right now for emerging markets. Some people are looking to Brazil. And then another one is going to be looking to the US for a more secure investment idea. Now, could we see this happening? Possibly. Another aspect in terms of this is that the pound is currently in a very sensitive area, like I mentioned just now. So what this effectively means is it could pivot incredibly easily against other currency pairs, and more specifically against the dollar. Should we see the dollar begin to strengthen and also take some strength away from the euro, that is obviously going to land up depressing the pound a huge amount. So the pound could necessarily be an investment opportunity to try and short the pound and buy up more dollar against that currency, and the same thing with the euro. Now, if I pop up this chart over here, you're going to see that the pound is showing very similar aspects to what the euro chart showed. So basically, this information is allowing us to see that currently the market is incredibly overbought on the stochastic, and that allows us to identify that there could be a long-term trend, bearish trend. Now, on this chart, I have been able to capitalize in the past month on shorting the pound against the dollar, and I've been able to do very well. Going into the next couple of months, I'm expecting that we could see a progressive pullback in the pound, and that is effectively part of the theme of this video. So just to end off with, there are two more charts that I wanted to show you. Number one is going to be this, the merged chart. And what you can see here, make sure to look very, very carefully, is that I've overlaid the euro chart and the pound chart with each other. So that's euro US dollar and pound US dollar together. What you can see there is that there is a very similar correlation in the trend. What this allows us to identify is that there is a very strong correlation in the euro US dollar chart and the pound US dollar chart. What this effectively means is that if the euro kicks off first and we can't see enough strength to the pound's trading idea, the pound could follow just because of the euro, and vice versa. If the pound does it, the euro could do it. So what this allows us to do is know that if we're going to be investing in one or the other, we have security behind if the euro begins to weaken massively, the pound would probably weaken as well. The other one that I'm going to show you is the compared chart next to each other. So what you can see is a piece of each of the charts, the euro US dollar chart and the pound US dollar chart. Once again, you can see the correlations look very, very similar. And once again, if I overlay this information, it will look almost exactly the same. The pivots are occurring almost at the exact same points, and the overbought and the oversold areas are being identified at the exact same points. This allows us a correlative trading opportunity to invest in both currency classes at the exact same time and take advantage of this once again. Now, just to end off with, I really need to stress to you, this is just my personal opinion. Now, for myself, I do trade a massive amount. As some of you may know, MS Equities Trading, I run an educational group. I train students all over the world, 25 countries around the world, and I've also have the privilege of being able to share these trading ideas with them. But one thing I always say is that you have to come up with this idea to say, I want to risk this money by yourself. I want you to take the time to research this information, research the aspects that I've mentioned to you, and make sure that you can decide for yourself and not just take advantage of the fact that someone here is telling you something to do and you should just trust them. Best to say is actually don't trust me, and preferably you should question my information that I'm sharing to you. That will allow you to build a more justified opinion of this trading idea, and will allow you to also see if you can invest in it and you can take advantage of the trading opportunity. So once again, another massive point I'd like to say to any of you who would like to learn a bit more about my trading strategies and about how I teach people in 25 countries around the world, make sure to visit my website, msequitiestrading.com. You can have a look at everything we do, our educational products most importantly. And if you are interested in taking that step and you feel like you do need someone like myself on your side to coach you for an entire 12 months and train in our online training academy, make sure to get hold of us and we'll help you out. Once again, like I said, make sure to subscribe if you are interested in keeping up with our weekly educational content. I hope you enjoyed this video, and I'll see you in the next one. Cheers for now.